Hi friends, in this video we will discuss about the counterpart between major flow and minor flow in Bank Nifty 5 minutes chart on 3rd of October 2022. We have one major vector from this point to this point and minor flow from this point to this point. As day opened, it opened with a gap down and look at the aggression of sellers at this point. They broke this low, rendering this high as minor solid structure. And when price tested that level back again, it created another solid structure, which means sellers are very strong in this level. When price reached this demand zone of this major flow marked in this pink rectangular box, it did show some resistance and price tried to bounce up as it did earlier also. In the same zone, when buyers were present on 30th September, they went with higher volatility. But now look at the volatility from today's perspective. In today's perspective, there is sideways market and then there is small bump up in a very organized flow. So the buyers from this zone are not strong as buyers from this zone on this day. Whereas the sellers are coming down heavily with lower highs and lower lows, and when they're coming with a solid structure, creating at the very edge of the vectors. So if it is if a trader wants to go long at this position with a stop loss at this level, he could be directly moving into the mouth of very aggressive sellers at this level. So it is obvious that in this particular situation, sellers are more dominant in this minor flow than the buyers in this major flow. So that should give us an idea to go short at the inward frequency of this minor solid structure created, this inward frequency, okay, rather going long and then waiting for further reversal of price towards long position. This is the context behind the price action between major sellers and major buyers and minor sellers in this zone. So with that notion, when price reached this inward frequency, it created a dynamic frequency breakout with this red candle, and after that price touched this inward frequency blue line two times, and the two times when it touched, it has greater resistance or of greater selling pressure in its top wick and bottom wick. So and suddenly price has fallen down. Buyers might not know why this sudden change in price, despite this being a major flow of buyers at this level. So with this notion, we need to draw some line work to precisely align with our target. Now, when price broke this level, you can go short at the very opening of this next candle with a stop loss above this high. And since these two are our price extremes, we can draw a modified pitchfork. And this modified pitchfork has once again tested this upside line with a fractal bar. So this is another opportunity for you to go short if it is not done here. And finally, the price has tested this bottom line of this pitch book exactly and then has given a bump up. So this is how we analyze trade, guys. We have entered short position here. If not, we can enter short position here. And the dynamic target goes along with the flow of this pitch book. So we have to identify the counterpart between major flow and minor flow. And if it is so, we have to identify the right edges of price where you can draw some precise line work and then align your trade positions accordingly. So this is about this video, guys. And before closing this video, I want to tell you that we offer training on price action strategy in greater details and very advanced details than any normal retail trader could even imagine. So if you're looking for such training opportunities, then taking the training, please do approach us. We can put you in one of our classes. Thank you so much. Let's see another video.